special shout out to our sponsor, Qualia. Qualia is the category-creating digital closing platform used by thousands of lenders across the country to seamlessly work with their title and escrow partners. By working better together, Qualia is powering lenders to deliver a differentiated closing experience for their clients. Through real-time communications, closing status updates, and workflow management, Qualia brings lenders together with home buyers and sellers, title and escrow agents, and real estate agents for a secure and seamless closing experience. Qualia is proud to have been awarded the Housing Wire Tech 100 Award for real estate, as well as CB Insights FinTech 250 Award. Discover how you can work more efficiently with your title and escrow partners at qualia.com/innovators. That's QUALIA.com/innovators.
Greetings, everyone. If this is your first time joining us, welcome to the Mortgage Innovators podcast, where we deliver fresh and hopefully fun and entertaining insights on all things mortgage and the innovation that's propelling our industry forward. I'm Margaret Chiavini, and I am with New Res Correspondent Lending. And every Tuesday, you can find our rotating group of co-hosts who all share their own unique connection to the industry. This week, I have two of my wonderful co-hosts, Dan Cantanella with Finance of America. Hi, Dan.
How are you? Glad to be here.
Great. And Michael Gudotti with American Pacific. Hi, Michael.
Hey, Margaret.
And this week, we have our special guest from Qualia, Ty Cieloha. And as you know, Qualia is the sponsor of this podcast. So Ty, welcome. And thank you for being here this week. And of course, thank you for sponsoring this fantastic podcast.
Well, thanks for having me again, Margaret. It's great to see you all.
Absolutely. Okay, we have a super fun topic, and it's all around back-end automation. Before we get into it, I want to make sure that all of our listeners know about the Mortgage Innovators Conference 2022. The theme is the power of innovation. We are back in person, and it is definitely an experience that you do not want to miss. It's May 2nd through the 4th. 2022 at the Hilton Anaheim. Registration is now live, and there's information about sponsorship opportunities, and you can find all of that info at mortgageinnovators.com/conference. That's mortgageinnovators.com/conference. Okay, well, gentlemen, let's get started with this great topic. Okay, so our topic today is really around back-end automation, and really what that means is the interconnectivity of infrastructure and how each piece talks to each other. So we know what's happening this year. The mortgage activity is slowing down. As lenders and really as vendors in our whole industry, we can't rely as much on the refinance activity to remain profitable. So we need to clean up our efficiency and find other ways to be competitive. And what better way than to have all systems talking to each other and connected? So may I just kick that off? And I'd actually like to hear from all of your perspectives on that topic and what it looks like. So Ty, maybe we can start with you.
Yeah, thanks, Margaret. So when we look at, let's say, the past 10 years and where mortgage technology advancement has gone, we had what we call the regulatory phase. This was, post 2008, introduction of TRID. Everybody was turning to tech solutions essentially to comply with the new federal requirements. So we then moved to the point of sale phase. We saw, the first fully ever digital application experience. Everybody's really focused on this, great borrower experience. And then, with the onset of COVID, we moved into what we call the e-closing phase. So everybody was really focused on their adoption of e-closing technologies, remote online notarization, e-signing tools, and now with the shifts in rates, we're seeing a move, and what we're referring to is the connected infrastructure phase right here. So folks are, we know profitability is down. It's much more competitive now. So looking at how do you take the existing technology solutions you have, the new technology solutions that you're looking to evaluate, and how do you integrate them in a way that they're no longer just single point solutions that solve a problem, but they all speak to each other across the board. So a couple of easy examples right here. We can talk about on the point of sale side of things. So, and we all know that a borrower can electronically submit their information, then goes into the processor to review. So can you take that a step further and add some robotic process automation to then transfer that automatically right into the underwriter's queue, or even add AUS to it right there, so you have a fully automated series of multiple systems that are speaking to each other. Another great example could be on the title side. So loan processor submits a title order, it automatically goes into the title company or the settlement agent's system, automatically starts a title search without anybody having to leave their system or any sort of communication. So you have auto order replacement, auto title search, and then you slash 3 to 5 days off the time to close a loan right there. So a couple of great examples of how implementing multiple systems that are interconnected and talk to each other. And we'd love to hear Dan and Michael's feedback on what they think of that, as well as any opportunities for improvement in the market right now.
Yeah, I'll kick it off. I guess I completely agree. I think when we look at 2022 and potentially even into 2023, we have a lot of focus right now on adoption and optimization is what I'll call it, and a lot of it really revolves around looking and assessing all of our existing technology tools and making sure that they're highly integrated, go very deep into the process. I mean, you mentioned the point of sale system, and what we're now seeing is these point of sale systems, really attempting to go deeper and deeper into the process, and that level of integration not only gets highly complex and sophisticated, but also needs to consume more data back, where previously they may have been primarily a single way data push to your loan origination system or CRM system and other subsystems, but now we're starting to see a much more need for that sophistication, where they're bidirectional data movements, highly intelligent, sometimes even wrapping around business rules and transformations around that data, to make sure that it's a seamless experience. And ultimately, the goal is, one of the goals of Finance America is really to, when we implement new technologies, really to take a very deep level at the level of integration that those platforms will allow, because ultimately we know that if we can't inject that technology into existing processes and workflows, then most likely it's not going to get adoption, right? It's just going to be another shiny object, shiny widget sitting on the shelf over here that nobody's going to utilize. And past experiences, people have created some really cool widgets out there for a lot of spend and a lot of dollars, and gotten little value because there was never adoption to that, because they couldn't integrate those into their existing workflows and processes.
I think that was spot on. I think one of the terms that was used before that I think just has a negative connotation around it that we've been trying to kind of switch a little bit was like forced adoption, right? Is how do you make sure that it's being used and it's being leveraged? It's like forced adoption. And nobody likes to hear that. So for us, it's really looking at like automated adoption. It's like, how can we automate things? Like to Dan's point, some of these tools that we want to see that usage rate go way up because of the benefits that it's created. And so it's like, how do we automate that, to make it easier on the loan officers so they can focus on, just what they're doing best, and that's the relationship management. And so I think that's one of our big focuses. And I think, tying into what you said there, Ty, is like, you're seeing it more on like the title side. You're seeing it, certain things now more on like the real estate side. And that's one of, I think, the biggest opportunities that we have as in the industry is around, I think, getting our internal systems really dialed in and talking to one another, because each of our internal systems is only a third at best of the transaction. It's not then including the real estate side or the title side, or in a situation where you've got an attorney involved, like any of those things. So it's like we've got so many disconnects that are starting to come together, within each individual, company, that getting those solidified is really going to help us as then we start to look to bridge those, intercompany, connections.
So, Dan, I loved what you said about that one of the big goals is a deep level of integration. In other words, that everything's going to be working together. So I think that's everyone's goal, is to have all the pieces talking to each other, and that promotes the efficiency. It allows you to grow without necessarily adding people. So if you were to talk a little bit about what does that look like when you start thinking about that? Now there's a new technology, let's say, and you want to integrate it. That's important. How do you think about that?
Yeah, it really depends on the technology, and there's some different scenarios. But I would say the first thing that we do is understand who they're integrate with today and some of the successes in their integrations that they have today. If you don't fall inside that box, then typically it's a completely separate effort to really understand. All right, I'm gonna have to either build this integration internally or rely on them to build the integration, and then that obviously magnifies the complexity of the effort to really evaluate that technology. So it's I would say I would break it into those two kind of buckets: is are you integrated with my current tech stack? If no, then you got to make sure that you have the right technology staff involved and engaged from your organization to really evaluate, can you integrate it the way that you want to inject it into your workflow and your current tech stack, so that you don't just end up with a lot of spend and a shiny widget on the on the bookshelf.
Mm-hmm. And Michael, when you talked, I love how you've shifted the paradigm between forced adoption and automated adoption, and really making it so that it's seamless and all of the people can focus on what they're really good at, and then the technology and innovation can take the rest of it. What are some of the best examples that you've seen kind of migrating from a old forced adoption to an automated adoption?
Yeah, so I think it's something of like a hard stop in the system where you can't move forward, business rule that stops you from being able to hit submit on a loan file. So let's say for LO, for instance, instead of you being, forced to go and do something before you can submit it to processing, we can now automate something where, we can run maybe our AI underwrite the second that you submit that file to processing. So then once the processor gets it, that AI underwrite, feedback and print is already a part of it. So it's not stopping you from doing what you need to do, but it's saying the second that you go to do that, it's going to do this at the same time. No extra work for you, but that way we're getting that consistency because we know the benefit that that's going to provide, but it's not changing your workflow and adding to your plate.
Wow. Would another way of saying that be that you're actually even further automating any touch point or any step that anybody has to do?
I think that's the ultimate goal. But you also don't want people to feel like you're taking something away from them, right? because then there's that dynamic as well. But no, absolutely. It's removing maybe the unnecessary or the manual touch points as much as possible. With all of the the systems that are in place. Another thing I can think of as an example is think of traditional drip campaigns, right? 5 years ago, it was that we're still going and manually sending out every email that we want, on post close or on a milestone update. And now it's like, no, there's business rules in place where, okay, the second that this file goes into, this status, we can automatically trigger out campaigns, updates to the clients, to the agents, so that they're getting that super valuable information, but it's not pending a loan officer or somebody in the branch remembering to go and do it when they've got so many other things on their plate and they're trying to go out and source new business.
Yeah, that's exactly right. Removing the mundane tasks from their plate so that they can focus on, business growth and building relationships, like Michael said, spot on.
That's so great. Hey, Ty, you're in a really unique and sort of wonderful position because you see and work with and facilitate connectivity for so many different lenders and originators. From your point of view, what have been the most successful situations or scenarios when we're talking about this whole idea of back-end automation and interconnectivity of infrastructure?
Yeah, Margaret, I would love to go back to something that Dan said, and it's something that every lender faces at the end of the day. It's right, you're relying on your third party or your vendor to provide an integration or connectivity, or you're having to hope that they have an API and go out and build out to that. So the first part is what Dan said, is understanding, is this a build or is this a rely on somebody else? And if it's a build, do you have the resources available and the capacity to do that? The second thing that keeps popping up in conversations I'm having really recently with lenders is there's so many different systems out there. And the first question is, are you integrated with XYZ vendor? Because we're using these folks for eClose or doc prep or POS, and I keep pushing back on them. And my thought is at the end of the day, instead of having every single piece of software connected every single other piece of software, let's find a single source of truth, which in my opinion is the LOS. So everything should go back into the LOS, then it should get fed out to whatever that other system is. And that way, if we're, as Dan mentioned earlier, we've got bidirectional integrations. We're pulling and pushing information from one piece of software to another. That single source of truth is always back in the LOS, and then another technology vendor again can then pull or push data back and forth right there. So you're not having to worry about doubling or tripling the number of integrations you have, and then you have a data integrity issue potentially too at the end of the day.
And Dan and Michael, from a lender perspective, what do you think about that? That the LOS is the...
Yeah, I agree. I think anytime we think about a transaction level data point, everything from a source of truth standpoint, we point back to the LOS. I think it does sometimes get tricky, with some of these point of sale systems layering on top of the LOS, and
Yep.
depending on what your stance is and at what point you push that loan record, when it goes from a lead to a loan, and trigger and RESPA and all the things that unfortunately we have to think about on a daily basis, there's some muddiness there. But for the most part, I would agree that anything transactional, the LOS is the system of record. Anything from a customer contact management standpoint, we do look at the CRM system as the source of truth there. So I think it's a key thing that Ty mentioned is, I'll just elaborate on a little further and say, just make sure that you identify internally what your sources of truth are, and make sure you're building the integrations to the right, systems of truth, because you certainly don't want to have multiples.
Yep. Yeah, I agree with that. I think, I look at it as kind of breaking it out in two buckets, almost like what, Dan said, is transactional versus relational. Anything relational, that can go probably through, CRM or whatever other systems you're using, things like, your video integrations, your, drip campaigns, all that type of stuff. But then anything loan related, where it's pertinent to the transaction, needs to be going through, the LOS as much as possible. One of the things we look at and run into, which I think a lot of people do, is just the latency issues that's causing. And I think that's what Dan was referring to in some of the muddiness, that comes up in some of it. But so for us, we've even went the route of like kind of having our own separate dev platform, so that we can manage some of that and not put additional, latency on the LOS. But ideally, anything transactional would be going directly plugged in through that.
Michael, what do you mean exactly by that you've developed your own dev platform?
Yeah, so instead of every integration for us going in through, the LOS, we've got a separate dev platform that we've built out from scratch, where we're pulling all that data in kind of a one-way pull from the LOS, but then we're able to use that system to push the integrations into the other platforms. So we're pushing data, into our alert management platform, into our CRM, into other systems through that platform. So it's not causing an additional drag on, on the LOS system itself.
Yeah, so you made there's a lot of good use cases for Michael just outlined, and depending on the complexity of your organization, like maybe you service loans, right? And obviously there's a lot of rich servicing data that you're going to want to bring back and reference, whether it's to your CRM or other data sources that what Michael outlined is also a good use case. Call it a data warehouse, call it a data bus, whatever you want to necessarily reference it, but somewhere where that entire transactional data, not just really what happened from origination through funding, but even could tail into servicing, where you're marrying up all those relationships and data points into one single source of truth.
That's great. Wow. Well, I personally have learned so much. One last question, Dan, I think you were talking about we have the internal systems. No, actually, Michael, you were, that the internal systems that we have, but it really only represents about 30% of the transactions. If you were looking to start the connectivity, where would you, what would it be, the title side that you would try to tackle first? Would it be the real estate side that you would try to tackle first? Is there kind of like a powerful strategy in, mapping out the how-tos to begin, getting more and more connectivity in the infrastructure?
Yeah, that's Ty. I'd be interested to hear what you say. I probably whichever person you talk to, whether it's a lender or somebody on the real estate side or the title side, would say their side is the most important. So selfishly, from the lender side, I think I would say, it's really the point. It's where is the transaction, starting, and kind of working your way through the life cycle of a relationship, not just the loan itself. But for us, the focus is really on that, getting the data really clean and concise, and those integrations working on the lender side.
Ty, what about your perspective?
Yeah, I mean, I think echoing up on what Michael said, right? Our world at Qualia, or a lot of our world is on the title side. So selfishly, I'd love to say the title side, but I think, again, going back to, I think it's the perspective, right? If you're looking at it from a title, a lender, or a real estate perspective, at the end of the day, the real focus is on the borrower experience. And so at the end of the day, that's something that all three can focus on. So if you can ideally have a great borrower experience from the agent, handing off to the lender, going to the settlement agent, and keeping those systems connected, that's the ideal state right there. And you can button those up either between the lender and the agent, or the lender and the title side, or the lender and the settlement agent, depending on what you want to address and what your borrower experience looks like. And ultimately, I think it's going to come down to, what does your current tech stack look like, and where do you need to fill those gaps in to create that ultimate borrower experience?
Great point. Dan, any thoughts?
Yeah, I mean, I'll just play devil's advocate. I agree with both of the statements from Michael and Ty, but I'll just play devil's advocate and say, it really depends on the organization, and I could see an argument also made from a servicing standpoint. If you look at, a customer, what does a transaction in 30 to 60 days, we'll call it, and their loans, sitting in the servicing platform for 4 to 7 years. So I could see, you can make an argument in a lot of different directions. You can also make an argument that, well, everybody should start in the CRM system, because that's where, the relationship should start and your marketing starts. I don't think a lot of lenders do that, but, I could also see that argument as well. So I don't know that there's any real one right answer there. I think it really depends on your organization, what you're trying to accomplish. Are you focused on, all around the customer experience? Obviously, if you're focused on, distributed retail, obviously you got to care for, all your distributed retail folks that are the hunters and gatherers, and making them as efficient as possible. So, when we talk about, the customer, I would say we rope that notation into a lot of different constituents. Obviously we surround everything around the borrower, but we also look at our customers as our sales force, as our broker partners, and potentially even real estate agents and other referral sources.
And I love how you tied it back, saying it always comes back to, what are the goals of the organization, and then what's the most powerful way to execute given those goals. So, well, thank you so much. I really appreciate it, Ty. It's always wonderful to see you. Thank you for being here. And Michael and Dan, just a great conversation. So thank you to our listeners for listening to today's episode. If you like what you heard, please subscribe to the Mortgage Innovators podcast on YouTube or wherever you podcast. And we look forward to seeing you for the next episode.